Alright, guys, good morning. Actually, today is Saturday. Just want to run you guys through the trade which I was able to take this week. So let's go into business. Anyways, let's start from NZUSD. NZUSD. So, so this is the trade I took on NZUSD. Let's go to 1 day time frame. So now on my 1 day time frame, you can actually see that first of all, my approach to trading is I want to come on 1 day time frame to actually see my directional bias. So my reason being on 1 day time frame is just to see the directional bias. That is, where is this market going? That is my own confidence first. Where is this market going? Then now, if I can get, you know, a view of where market is going, I want to mark up my swing range on 1 day. And this is what you can see that I did here. Many people will be looking at this noise happening here. Nothing concerns you with this noise happening here. Nothing concerns you. You understand? So all where you want to focus on is this place. This place. This is where you want to focus on. So now I want to narrow this thing down. And what can you see here? You can see that market is creating your lower high, lower low, lower high, lower low. Then I mark up my lower high and lower low. That's all. That's all. That's what I'm just looking for on 1 day time frame. That's all. That's what I'm just looking for on 1 day time frame. Then I go to 4 hours. Go to my 4 hours. 4 hours, my 4 hours time frame, I called it is my immediate trend. That is immediate trend. That is where I want to, if I want to take counter trend, if I want to take counter trend, or I want to take pro trend, this is where I want to see. This is where I want to take my trade. So this is it. I go on 1 4 hours time frame and I can see this lower high and this lower low. If you could remember, is my 1 day swing range. So now where is my 4 hour swing range? You see, when I could mark it up, market shift, which is this market is trying to pull back to this zone here, 1 day zone, and you must also mark up your 4 hours range in your 1 day range. That is, you will mark up your 4 hour structure inside your 1 day time frame also. And this is what you can see: a market shift here, break of structure. And where is the recent 4 hours break of structure? This is it here. So I'm marking here as one of my 4 hours point of interest, and also here, which is the extreme order block, as one of my 4 hours point of interest. So now, no, the main reason why we are using technical analysis, and for those that don't know, the main reason of technical analysis is to build a narrative. You want to build a narrative. And this is what we can see here. I'm trying to build a narrative. I've gone on 1 day time frame. I've marked up my swing range, which is the area which I want to focus on to trade. And then I come on 4 hours. So now when I come on 4 hours, I want to ask myself, what is market doing currently? What is this market doing currently? Then I said, okay, market shift here, then tap into this other block again and break of structure here. Then this is when I want to mark up my 4 hour swing range, because according to the rules of market structure, is after a break of structure, expect what? A pullback. after a break of structure, expect what? A pullback. So now me marking up this my 4 hours counter trend, which is here will be my lower high and higher high. Already in my mind I know that this is counter trend, isn't it? This is counter trend. So then I mark it up. And I see that market is trying to respect this other blocks here, which is this recent break of 4 hours break of structure. Market is trying to respect it. So then when I mark it up, I go back to my 1 hour, which is my entry time frame. Had it been I want to swing trade, if I want to swing trade, this will be my entry time frame. So now this is where I want to mark up my 1 hour structure also. I want to mark up my 1 hour structure, and we can see when price tap into this 4 hours order block, you see market shift, which is this is our 1 hour recent lower high and market shift. Then this market supposed to tap into this place, even if we should see that this market did not mitigate this our 4 hours ob counter trend ob very well, and you will see this price will still come back and mitigate it very well. And then we can see market shifts. Unfortunately we are unable to take this trade because I actually take this trade as intraday trading. That is a 15-minute scalp trade. We were unable to take this trade because I thought market would just come back to this zone and before moving down. But unfortunately, market did not come back to this zone. It just moved down direct. So then this place also, I was looking to take a trade here, but I was not in the chat when this thing just tapping and just leave me and go. So then that one is by the way. So then we see that markets later come back and mitigate this our 4 hours order block. It came back and mitigate this our 4 hours order block here. Let me delete this one. Yeah, it came back and mitigate this our 4 hours order block, because if we can see here, we can see that this place here is double bottom. You can see a break of structure to the upside, retest, and it give us this double bottom. I think you can see what market did there. Then, then, then sweep the liquidity. Then sweep the liquidity at the top. I think you see, it then come back, sweep this liquidity, that it mitigates this OB properly, sweep the liquidity at this top, then come down a little bit, you know, giving us a break of structure. So what this price will do, we tap into this break of structure OB back before coming down. This is what we are expecting price to do. Yes, this is what we are expecting the price to do now. This is what we are expecting the price to do. After you sweep this liquidity at this top, if you should go on your 15 minutes time frame, you will see it's just a liquidity sweep at this top, and then it gave us this pattern. Let's go to 15 minutes time frame. Coming down to 15 minutes time frame, you could see that it then give us respect this other block here, break structure. What is going to do back is just to tap into this place and then come down. So that's my view on NZD USD. Though we missed this trade this first time that it tapped into this place. The first time it tapped into this place, we missed the trade also. So USD card. We actually have a trade on USD card also. USD card. Okay, USD card. This trade that you are seeing here now, I took it on. That should be on Wednesday or Monday. No, that should be on Tuesday. I took this trade. I took this trade on Tuesday and it was 15 minutes scalp. Let me run you down. After I have marked my structure on 4 hours, I mean on one firstly, if I want to do anything first, I want to go on one day. I want to know what price is doing on that one day time frame first. What is price doing on one day time frame? What is price doing? And if we can take a look, we can see that this place now is our recent break of structure on one day, which means this price is on a bearish trend. You understand? It was on a bearish trend, giving us lower high, lower low, break of structure, lower high, lower low, lower high, but it's supposed to create a lower low, but unfortunately it did not. Then break the structure to the upside. So this should have tell you that okay, oh, market is on bearish trend before it then break this recent high to the upside. Then it break this recent high. After I break this recent high to the upside, give us a break of structure here. So this is my recent one day swing range. This lower high and higher high. My recent one day swing range. And this is what I mark up with the green here. I think you understand. I go down to 4 hours, 4 hours time frame. I can see I can see my, extreme order block here. I mark it up. You understand? I mark it up. So now I go down to 1 hour time frame. I want to tell you how I eventually got entry on this 15 minute cap. I see that this place here now, which is this place here, is my one hour recent lower high. So now, and after a break of structure, you should be what expecting a pullback. I go down on 15 minutes time frame. After I go down on 15 minutes time frame, and whereas you should know that this price now is actually in our 4 hours order block. I see that price has already, on 5 minutes, price has already shifted bullish and tap into this our order block here. That is how I ride this trade to the upside. So it was on Thursday that I saw this gap, which is this is one of my pattern. If I see this pattern in the chart, I'm always happy. And what was the pattern? See, price, sweep liquidity into our zone here, create market shifts, tap into the other block here, giving us a break of structure to the upside, then leave an imbalance around here. It's leave an imbalance, then giving us this chart pattern. This, you could see that after a break of structure, a 1 hour market shift to the upside, this price did not retrace back into 50% of the trend, which is it did not retrace back into 50% of this trend here, giving us what we can call this a trend line, liquidity here, from here to here, gave us that trend line liquidity. And some people will see it, call it double bottom. Why newbie traders will be scaling in here, putting their stop loss above here, scaling in here. They will scale in here, put their stop loss here. Another ones will scale in here, put their stop loss here. We know as a professional trader, you know that price is just, setting trap, and see what happen. We mark our hobby. The price came with long weak liquid, just sweep the liquidity. NFP swept the liquidity and tap us in. Just come back, swept all the liquidity before going up. You could imagine, swept all the liquidity below here before going. So if I see such pattern, this is one of my highly probability trade setup. If I see such thing here, it's one of my highly probability trade setup. Once I see this, this is one of my highly probability trade setup, because I know that price will surely sweep all the retreat trader here, tap us in before going to the upside. So we are still anticipating this trade. We are expecting this trade to come to this our 1 day order block. Then we can then look if this trade is going to continue its bearish movement. So this is one of the trade I took on USD card. On BTC, I don't actually on BTC, I actually messed up on BTC. And why did I mess up? Let's go on 1 day. On 1 day, coming to 1 day time frame, I see that this market is on bullish run. It breaks structure here, break structure here, and then broke our 1 day recent lower high. This give us market shift. This place, so this trend gave us the market shift. So now when we are able to mark up, I could have just marked this up. This is our 1 day recent high now. Our 1 day recent higher high, our strong higher high. I can just easily mark it up like this. Can mark it up like this. You understand? So, and I can say this is my 1 day order block. It's my 1 day order block. If candle is long like this, you want to use half of the candle as your order block. You understand? Let me just gauge it. Okay, the half will be this place as your order block. Yeah, this is my order block. So then we are going to 4 hours time frame. So that now when we come to 4 hours time frame, we can mark up our structure. Take a look. The same pattern that I showed you on USD card. You see that it also plays out here. That is, our recent 4 hours lower high to the upside. Then market break our recent 4 hours lower high. Tap into the breaker block, break structure, come into the other block, break structure again, then give us this liquidity setup. This trade did not retrace into 50% of this trend, before going down. You could see. And what do you see price does? This is one of the high probability setup that I tell you. The price swept this, all the whole retail trader that are trying to enter from here, putting their stop loss here, swept them, tap into this other block, tap into the other block. break of structure to the downside, give us our recent 4 hours high, then break structure, then break structure. I think you see, then break structure. Then we mark up our 4 hours break of structure, because this is our recent break of structure to the downside, our recent 4 hours high, and our recent 4 hours low. So then, I want to tell you what mistake happens here that makes this trade to become loser also. So then, if we go to, if we want to mark this kind of break of structure, I mean order block here, we could see that this is our order block. Yes, but the order block that I marked is correct, but always let your stop loss be at least at your recent high. This is the mistake that I make here. Your stop loss should always be above your recent high, which is this place. And you could see price came back, price came back after giving us market shift here. After giving us market shift here, e came back, tap into, sweep this liquidity at the top here, tap into it, and before you see that this market will drop down. It will drop down more because USD is weak. It will drop down. Then you see, had it been our stop loss is above here now, this trade will still be in our favor. So that's just what I want to tell you. Always let your stop loss be above your recent high. Always let your stop loss be above your recent high. You see, this one we are wrong here. Price actually, just tap into it. So that's my trade that I took last week. That's the trade that I took last week. So let's look forward to this coming week and see what we can make out of the markets. So see you guys.